Well, I think it's pretty steep, Tara. The main indicators that we see can be quite easily manipulated. So things like industrial production, GDP, etc. GDP, of course, not slowing down that much at the moment. But when we hear the anecdotes that are coming from industry in China, then you're hearing about year-on-year declines in activity, year-on-year declines in orders. And certainly when you get to the property sector, there's falling prices and falling activity there. So at the moment, we're still on a number in our mind of 5 to 6% GDP growth, but no more than that, and going down next year. Well, the interesting thing is going to be how the labour market reacts, because that's going to be the real determining factor behind government policy. And so far, as the industrial economy has declined, and it is in decline, the services economy is actually doing quite well. So that's keeping employment buoyant. And while that's the case, the government can continue to put pressure on things like property and overcapacity in SOEs. So the resource-intensive period of Chinese growth is gone. We've now got a services sector economy instead, and that's at least keeping things relatively calm in the labour market. Well, I think the weaker China is affecting other economies already, especially in terms of commodity demand, and we're seeing that in the price of all sorts of commodities. But no, I think we're in a China in transition, because in my view, urbanisation has just about run its course. We've got far too much supply of property, there's far too much supply of capital goods industries, but there's too little supply of services. And that's really what's coming out just now, and I think that's going to be the transformative nature of this slowdown. We're going to see a much bigger service economy in China, more consumer orientated.